We are back. It's a Friday. You know, we are certainly giving you an update with regards to the fixed income market. Renaldo D'Souza, who's the head of research at Sterling Capital, is with us today. Renaldo, just before we went for the break, you're giving us an outline with regards to the government's initiative and focus in extending the tenor of government debt. Now, we want to look at the domestic debt subscriptions, and the graphics team has put that up for us. Please give us an overview. What are we looking at here?
If you look at the chart for both treasury bills and treasury bonds, there's been high subscription for government debt, at least since January.
Okay.
Yeah, so 2019 has been a good year in terms of government borrowing, that they're receiving full subscription for most of its issues.
Okay.
The exception also been this month. I was looking at the charts, and it's about 72% so far in terms of subscription for T-bills.
Okay.
And the results of the treasury bond showed that there was a 65%
65%
subscription rate.
Okay. Is it that liquidity is going to the repo market, or what is happening there?
Yes, from our discussions with especially the tier 1 and tier 2 banks.
Yes.
They are risk averse and would prefer to lend money in the repo market as opposed to buying treasury bills.
Interesting. Yeah. Let me bring you now to the retail market. I think you've articulated the case for the institutional investor very clearly. So recently, the Emma Kiba closed. I think that was last week. I don't know if you were privy to the subscription rates and what was happening there.
To be honest, I haven't looked at the subscription rates, so but
yes.
With Emma Kiba, there's been under the subscription, I would say, out of lack of information.
Okay, yeah, so people are just not aware of that opportunity.
Yes, because the segment at which it's targeted at is not really knowledgeable in terms of investment in government debt.
Interesting. But it's very interesting. So I have invested in it, and I put in 3,000 for an issuance that was, I think, done 3 months ago, I think in March or April. And I got my first dividend, my first interest rate payment. And all it was 165 shillings. I think it needs you need a lot of money to make money from fixed income. Because I said, okay, fine, 165. I'm happy I got a return. But I was wondering, it would take me a very long time. And when you actually look at these subscriptions, like the CBK does say you need 100,000 minimum to be able to go directly and invest, to be able to tap, like for instance, if you went in and subscribed for 1 year, with 100,000 you'd have gotten 9.7% from the government in within a 12 months period, but that's excluding tax. How do the retailers actually make money from the fixed income market?
Retail investors ideally would prefer to invest in equities as opposed to government debt, and with equities, there's more people are more knowledgeable about equities as opposed to fixed income securities.
All right.
And the people who prefer to save the capital would prefer to put money in a savings account. Savings account says giving you between 3 and 6%.
Okay.
So the 9% to them is not.
It's
really
neither here or there.
It's
but
not a big difference.
I like looking at the retail investors, because when you read books of how the rich people in America became billionaires, so you have families that for years, decades, almost even centuries, just made money by putting their capital into government securities and funding government infrastructure or any government projects. So every year they'd put money in, and then they would recycle the capital as well as the interest earned over years. So of course it took them, or maybe over 30, 40, 50 years to actually become wealthy. Is that maybe a strategy that someone would consider, or you tell someone to consider if they're in Nairobi and they're a retail investor?
When you look at it, say you're telling someone to invest, say 100,000 shillings, and then get 9,000 shillings in a year.
Yes.
Someone looks like, what other alternatives do they have?
What other alternatives are there? Because that's 9.7.
Yes.
Then the best paying, the highest yield we've seen on the stock exchange is 14% Williamson T, but then there's not sufficient liquidity. So I'd probably go with 8 to 9% that we have seen in the banks. So similar to fixed income.
Ideally, the equities should give you a better return than that, although we're in a bear market.
Yes.
But also someone is looking at the process of investing in Emma Kiba.
Yes.
It's tedious, or it's not well known to the retail investor.
Actually,
the
it's not
typical
very,
investor
very
doesn't
clear.
know how to go about it.
Yes.
So the failure, in a way, is from the part of the central bank. What have they done to make it easy to understand for retail investors?
Okay.
Does the common Kenyan understand how it works?
Okay, that's very interesting.
Yes, and the answer is no. So investors would prefer to put money in a savings account
Because that's very clear. You just open an account and you put your money.
Yeah, and very accessible.
Okay. And it's also interesting because the other option is either going through a money market fund, but also that information. It's now slowly beginning to come into the market, and we're seeing influencers demystifying that opportunity. Is that something that you'd actually recommend for somebody who wants to get into investing and they're a retail investor in as far as the fixed income is concerned?
For an investor who doesn't want to lose their principal investment, a money market fund gives you a good alternative to invest in fixed income.
All right.
The issue with the fixed income or Akiba comes in the case where someone wants to exit before the maturity.
Oh yes, before the maturity, so liquidity.
Yes, so the issue of liquidity, or how do I go about selling my bond?
Okay.
Yeah, so that's something many investors won't want to go through.
Okay.
They'd prefer, if you look at most money market funds, within a day or two, they have access to their money.
Okay. Wow, interesting. Let me ask you maybe 2-3 more final questions. So you are the head of research at Sterling Capital, and I know you're always talking to investors and advising them on where to place their money. Where are you advising them to place their money for the next week or so?
For the, looking at the market, you look at equities are providing a lot of opportunity in terms of the current level of prices.
So they're cheap.
They're cheap. Some stocks are trading at, like Nation Media Group is trading at almost 18-year low.
Wow.
So there's a lot of opportunity.
Are they still making as much money as they were 18 years ago?
I would say no, because times have changed.
Fair enough.
Technology has changed, and people are reading. Fewer people are reading newspapers, for instance.
All right.
But also look at in terms of the growth potential of stocks, especially if you're going to take a long-term view.
So what is long term? Is that 5 years? Is that 10 years?
I would say a year or two at least.
Okay, 2 years. So 2-year view. All right.
Yeah, and look at the current prices. I think there's a lot of opportunity.
So which stocks would you actually recommend? Or what stocks are top of mind?
I would still stick with banking and Safaricom.
Banking and Safaricom.
Yes, mainly because of either liquidity and also consistency in earnings.
Okay.
But then there's also, for those who do not want to risk their capital, put money in fixed income.
Fixed income, all right.
And especially on the shorter end of the curve, let's say 5-year bonds.
All right. What are 5-year bonds at?
That would be about 10%.
10%. And then the 364 is also 9.7%, so closer to the 10% mark.
Yes.
And can you do this, like if I wanted to do this, can I do it through your brokerage house, or would it be better to go directly to the Central Bank of Kenya?
It depends on the primary. There are people who prefer to go through brokers.
Okay.
But there are some who prefer to go to the Central Bank.
So you can actually go directly to the Central Bank?
You can go directly,
okay,
if you don't mind the process of open CDS account.
Okay.
But for those who prefer to deal with the brokers, particularly because of additional investment advice,
yes,
you can still go through the broker.
Okay. All right, fantastic. So we're coming to the end of the show. What are your parting words when we're talking about fixed income investments in Kenya today?
Fixed income is ideally an investment for those who don't lose their principal. And it gives you two sources of income, either from the capital gains or the consistent coupons, or the consistent interest earned by the investment instruments.
Okay.
In Kenya, it's a 6-month or semi-annual interest payment.
All right.
So it gives you some source of income, regular income, but also there's opportunity to trade the fixed income security when you need liquidity.
All right, fantastic. Yeah. Thank you so much there for your insights on this particular issuance, rather on the fixed income market. So there you have it. If you actually want to preserve your capital, in other words, if you are risk averse, your risk for losing money is very low, then you need to be looking at the fixed income markets. Renaldo D'Souza works for Sterling Capital. You can either go through a stockbroker, you can either go through a money market fund, and that's the pension funds that are out there, or directly go to Central Bank. Really, there's so many opportunities for you to actually chase a return. We've had 15-year paper priced at 12.67%, 1-year paper priced at 9.7%, 5-year paper priced at 10%. You have no reason not to be earning a return. It does take a very long time to become wealthy, but it's always very important. Preserve your capital, grow slowly, don't be too greedy for return. Preserve the money that you have, at least for the next generation, if nothing else. Thank you for joining us once again. It's the end of the week. It's been fantastic having you watching us for this week. Join us again next week on Monday. That's 2:30 Metropole TV. We are streaming live on YouTube as well as on Facebook. Enjoy your weekend.